So this is one morning where I would just ask you to please, today should be the day you listen to the entire episode. This is if you want to understand impacts that are, I believe, very likely to hit your portfolio and in particular Tesla in the weeks and months ahead. There's a lot of data out this morning, data on Tesla, data on the economy, and it's all adding up to something pretty significant. So I'm just suggesting you hang in there today. Maybe sometimes you get out after a few minutes because you don't want to hear all the economic stuff. No, today you need to hear that economic stuff. So let me start with this. First, Tesla is up strongly in a rough market for the NASDAQ and the Mag 7. And this is very typical performance after an earnings blow off. To see Tesla all of a sudden, have an up day, although commonly it takes another day. I would have expected it tomorrow or Monday. But at this point, Tesla is only down as much as the market. So the overall public that is investing in Tesla has decided that Tesla is in good a shape as the rest of the Mag 7, at least, where it's being compared. Multiple sources are saying that now there could be partially news too, okay? Because multiple sources are saying this morning that 12.5 is a complete game changer. Some saying that FSD is solved. I don't think you can go that far because there's been a couple of misses in the videos that I've been watching and the people I've been listening to. But apparently it is a huge step change with human-like behavior, unbelievable smoothness, and reduced interventions to almost zero. And I'm talking about safety interventions, real interventions. I've only actually heard of 2 interventions for safety reasons thus far. Now that's a lot, but 2 compared to, everybody having 1 or everybody having 2. No, 1 person had 2 interventions and everybody else is saying 0 interventions. So that's what I'm hearing so far. Now, they all change over the next few days. Now, this is from Gary Black this morning. This is also could be impacting the share, the stock sales this morning. China doubles cash subsidies to about 2770. So I guess they were around 1300, 1400. Now they're at 2770 for consumers who convert to EVs. So it's a very positive thing for China sales. And we know now that China has that additional capacity that they can, punch up their numbers in China. This is from AJ. He says, this is from a comment by Lars Maravi, Tesla's VP of Vehicle Engineering at Tesla, suggesting that Tesla is on track to sell 20,000 Cybertrucks or more in the third quarter. This would add incremental revenue of roughly $1 billion for total Cybertruck revenue of $2 billion. He says Lars says that they are currently producing more than 1,400 Cybertrucks per week. That could be an impact in the stock. All 3 of those things that I've just mentioned could all 3 be impacting the stock this morning. Warren Redlich did a poll, and he got over 1,100 votes. That's really good. He showed that the poll showed that 60% of Tesla owners would put their cars out into the robotaxi fleet. That is surprisingly high, in my opinion. But even if it's off by double, 30%, if 30% of the people put their cars into the fleet, that would be plenty. That would be all that would be necessary to definitely put the robotaxi in business. So President Trump says this morning that Elon never asked him to lay off of electric cars. He then gave headline Teslac, this is Trump, gave headline Teslac arguments about range. Now, let me just say this about what's happening with electric vehicle sales in the United States. The other car manufacturers didn't put out enough charging capacity. The charging capacity that was out there was horrible. The charging capacity was not in the right places. It was slow. It was intermittent. They didn't work. They didn't have easy ways to show people how to get to their charging stations. They didn't do any of the things that Tesla did. So the other car manufacturers are all failing. Every single one of them across the board, they're failing in the United States. And that is impacting the feelings that people have about Tesla. Okay, that's impacting a decision to buy any electric car. It's impacting Trump's thinking because that's what he's hearing from his friends. Okay, now you add to that something that people have been forgetting about. The cost of gasoline in the Midwest is like half what it is in California, Washington, Oregon. Well, Oregon's a little better, but Oregon's pretty high. But California in particular, the price is just crazy in California, pretty high in New York and some of the other northeastern cities. That is a big, big driver of EV sales. The price of gasoline is even higher than that in Europe. It's a big driver of EV sales. Now, why am I harping on this? Look, I've been in the bicycle business my whole life. Whenever the price of gasoline goes crazy, people start buying bicycles like crazy. I use crazy twice in the same sentence. Anyway, it's a big deal. And then as soon as the price of gasoline comes down, people stop buying them again. I've seen this boom bust take place over and over again. So this is a huge piece of the puzzle as to what's happening with Tesla vehicles right now. I think there's another thing. So China is providing top-down pressure. That's why they're selling so many cars in China. Lots and lots of benefits to buying electric cars in China. The Chinese government wants you and is not forcing, but everything but forcing people to buy electric cars in China. Europe, very high gas prices, and the United States, you've got the division between the coasts and the interior where gas prices are just so low. So take all of those things into consideration when you think about where EVs are going and how many EVs Tesla is selling right now. But anyway, 3 great news stories. Tesla up this morning. Now let's go ahead and, oh yeah, by the way, this is Randy Kirk. Hit like, subscribe, notify. This morning, Cern Basher will be here, and I know he's got good stuff coming up. And then we've got Nicholas, I'm sorry, no, this is a Thursday night. So we have Bradford Ferguson, and Bradford is one of those people that's taken at least 2 hours on the road with FSD 12.5. Maybe by tonight it will be more than that. So it'll be very interesting to hear what it is that Bradford is going to be able to tell us tonight. And joining Patreon would be a big help right now. I think the news, I think I've been doing a good job this week. Don't you? Anyway, if you think I've been doing a good job, please consider the idea of supporting the channel with your Patreon. All right. The market is a bit happier this morning after the durable goods report put the lie to the higher than expected GDP numbers. Now, I don't think you're going to see this reported anywhere else. I haven't seen it reported anywhere else. You decide whether over the next few days, whether Randy was the first person to see this and the first person to report on it. Okay. Because what you're going to see is that the GDP number came in much higher than expected at 2.8%. Nobody thought it would be that high. 1.9, 1.7 were the numbers that people thought. It was 1.4 in the last quarter. And so this is like shocking. And the market in the pre-market had plummeted as a result of that number coming out, because that would mean the economy is going along great. And, it's a problem. Okay. And the Federal Reserve is not as likely to reduce the interest rates. Okay, but then out came the durable goods reports. We're going to go into these in detail in a second. But the durable goods number came out and it said June was a disaster. What else do we know? Housing was a disaster. Auto is now showing to be a disaster. Look, we have Ford and General Motors in their reporting. We'll be reporting a lot of this later. We've got the disaster happening in terms of credit cards. We're having a disaster in savings. No, what's happened is that maybe April and May were okay, and then June flatlined. And this is what happens sometimes in recessions. The consumer runs out of money. How much have I been talking about this? I think in June, the consumer ran out of money. They're done. They can't do anymore. And we'll see more examples of that later in a second. And I think that's probably continuing into July. But 1 month does not prove anything. We got to see what happens with the July numbers, and it'll take us a few weeks to do that. But I think there's a lot of evidence, and I think people are starting to see this evidence that the recession is hitting, and it might hit really fast. It might not, but that's just this. I'm just giving you this hint that's what I'm seeing right now, and we'll see we'll see what happens. Airline earnings, rough landings with big misses. American, Delta, Southwest, all struggling. Real gross domestic product, well, it came in at that 2.8% rate. According to the advanced estimate released by the U.S. Bureau of Economic Analysis, again, this could be the first, and the next one could be lower, and the next one could be lower after that. That's what happened in the first quarter. It was higher, and then it came boom, boom, lower and lower. According to them, the increase in consumer spending reflected increases in both services and goods. Within services, the leading contributors were healthcare, housing and utilities combined, and recreational services. Within goods, the leading contributors were motor vehicles, see, and that's not happening anymore, and housing isn't happening anymore. Recreational goods and vehicles, furnishings, and durable household equipment. You're going to see that durables dropped off the map. And gasoline and other energy goods, I don't think those are holding up either, based on the price of gasoline, price of oil is dropping like a rock. It's also said that the increase in private inventory investment primarily reflected increases in wholesale trade and retail trade industries, partly offset by a decrease in mining. Within non-residential fixed investment, increases in equipment and intellectual property products were partly offset a decrease in structures. Well, it says the current dollar GDP increased 5.2%, but of course, you have inflation sitting at 2.6%, according to them. So that's a hint that tomorrow's PCE is going to come in at around 2.6, which would be higher than expected. 2.5 is what was expected. Excluding food and energy prices, the PCE price index increased 2.9. That would be much higher than what was expected, I think. Wait a minute. I could be wrong on that. No, that could be good. 2.9%, I think, would be good. I think last month was 3.7, so dropping to 2.9. So that would be a really good piece of news. Okay, personal income. Current dollar personal income increased in the second quarter. The increase primarily reflected increases in compensation and personal current transfer receipts. Remember, this is for the entire quarter. Disposable personal income also increased, compared with 4.8% in the first quarter. I'm sorry, 3.6% compared to 4.8%. So it was less than in the first quarter. Real disposable personal income increased 1% compared with an increase of 1.3% in the first quarter. So this is the real disposable income. Now that's good. You want to see that disposable income increasing, but I think it's not going to be good because personal savings were $720 billion in the second quarter compared with 777.3. So the personal savings rate as a percentage of disposable personal income was to 3.5, dropping from 3.8. This is like extremely low. Initial jobless claims, of course, coming in this morning. In the week ending July 20th, advanced figure for seasonally adjusted claims was 235,000, a decrease of 10,000. Now that would suggest a strong economy. This number has been set in such a narrow range that I'm beginning to question. But anyway, from the previous week's revised level, the previous week's level was revised up by 2,000 from 243 to 245. So maybe that's a problem. Maybe we'll start seeing revisions upward. The total number of continuing weeks claims for benefits in all programs for the week ending July was 1,970,000, which is an increase of 152,000. So then we got the durable goods numbers, and this is where the market started moving. The NASDAQ, which had been way down, went towards zero. The Dow, which had been down, went positive into the green. So here's what happens with durable goods, and this is the key to the puzzle. New orders for manufactured durable goods in June down following 4 consecutive monthly increases. See what I'm talking about here? We had all these increases, and then kaboom, it decreased 6.6%. This is following a 0.1% increase in May. Excluding transportation, take out transportation, new orders increased 0.5%. Excluding defense, new orders decreased 7%. Transportation equipment down 2 of the last 3 months. drove the decrease. 19.6 billion, 20% down. This is like depression level decreases. Now that's a 1-month statistic. Shipments of manufactured durable goods in June, up 4 of the last 5 months, increased 3.5 billion or 1.2%. This followed a 0.4% May decrease. Transportation equipment, also up 4 of the last 5 months, led the increase. So you had these shipments increasing, but no new orders. Economic Indicators Division, economic indicators of shipments, inventories, and orders. I'm sorry, what have I got there? Something got in there that shouldn't have got in there. I'm very sorry. Unfilled orders for manufactured durable goods in June, down following 46 consecutive monthly increases, decreased 1.3%. This followed a 2% May increase. Transportation equipment down following 41 consecutive increases, drove the decrease down 2.1%. This is what I'm talking about. I know 1 month does not a trend make. Inventories, durable goods down following 2 consecutive monthly increases. So they sold off everything, and now they're not adding more because they don't have the orders. Transportation equipment down following 10 consecutive monthly increases, drove the decrease. Capital goods, non-defense new orders for capital goods in June decreased 22.4%. Let me say this again. You ready? Non-defense new orders for capital goods, businesses ordering stuff for their business, computers and such. 22% down in a single month. Shipments increased to 4.2 billion, 5.2%. Unfilled orders decreased by 2.3%. Inventories decreased 0.3 billion, or 0.1%. Defense new orders for capital goods in June increased, so the Defense Department is buying. Shipments decreased, and unfilled orders increased by 0.6 billion, 0.3%. Not that much there. Okay, then we have this. So you're beginning to see what I'm talking about here. Breaking from the 𝐂𝐲𝐶 letter this morning, just in, early credit card delinquencies for low-income houses spiked to 4%, the highest level since 2011. Early delinquencies have quadrupled in 2 years on credit card debt, and interest rates are at record highs. These delinquencies have risen for all income levels, and moderate and middle-class households seeing delinquencies triple. Even high-income Americans have experienced delinquencies raising to their highest levels in at least 7 years. Excess savings have been depleted, interest payments are at record highs, and prices are still rising. He says, how long can consumers hold on here? I think the answer was the end of May was the end of the consumer. Again, we got to wait to see the July numbers. It'll take a while before that happens. Let's see how the markets are currently thinking. Now, again, if the consumer runs out of money and if the economy starts to go into a tailspin, we could see a decision by the Fed next week to go down a quarter. We can see a decision by the Fed to cut a quarter between the July and the September meeting. We could see the September meeting with a 0.5% decrease. But right now, everything is pointing to what I've been saying for a very long time, third quarter recession. Might already be in it in June. I've been saying that all month. Been saying it for at least 5 weeks, 6 weeks. Probably already in a recession, but third quarter, almost for sure, we're going to see GDP dropping. Okay, so what in the world is going on? Tesla is now up 8%. I'm sorry, $8, 8%. That'd be great. $8, now $7.86. The Dow is up 205.81. The NASDAQ has gone back down a bit. It's still higher than it was at its low for the morning. It's down 126. S&P down 6.71. And we've got all the Magnificent Seven down. Apple 2, almost 3. Google almost 3. Amazon 2. Meta 8. Microsoft 8. And Microsoft, I think, no, it was IBM had good numbers. NVIDIA down 3. These are big numbers. We've got the Cathie Woods, though, all up this morning. People talking about this rotation. They continue to talk about the rotation. There is a small rotation taking place. There is a small rotation out of the techies into a broader expanse of good companies. And evidence here you got of the Cathie Woods being up this morning. All right, so what do those percentages look like? We've got the Dow is up 0.53, NASDAQ down about the same, down 0.60, S&P almost flat, 0.04% down, 0.05% down. Tesla up 4% this morning and still rising, going up strongly. So maybe the news is having a big impact on this, not just the rebound from the earnings drop the other day. So Apple down 1, Google down 1.5, Amazon down 1, Meta down almost 2, Microsoft down 1.5, NVIDIA down 2.5. So big now, and by the way, all of these are turning toward more positive. So they've dropped and now are going towards more positive numbers. But big drops with Tesla being the outlier. All right, let's go ahead and take a look at the bonds now. We have got the bonds this morning. We've got the 10-year dropping 6.3 basis points at 4.222. That would also be evidence that the bond market is believing interest rate cuts are coming. 4.22. Now let's look at the 2 years at 4.4. So we're still looking at 17, just between 17 and 18, 17.8. This is we were at 15, 14 yesterday, 17.8, a little higher, obviously, but I think we're going towards that inversion reversing. The 2-month, though, still going up here this morning at 5.382. That is almost as high as I've seen, almost back to 120 basis points on the 2-month. I'm going to say it again. I'm not buying any 2-month. so I'm not. This is not investment advice. But if you want a short-term deal that might really pay off, might be that 2-month. Okay, that's not Okay, so let's go on to oil. Oops, let's go on to the oil patch, and we had the oils are also down this morning. Brent is heading towards the 70s. It's at 81 this morning. Texas Intermediate 77.21. Both of them are down strongly. Still a $4 difference between them. Don't know why it's jumped up to $4. Nothing real, no real evidence of a strong reason for that. Natural gas down another 0.94 this morning, is at $2.09, almost $2.10. Could easily go into the ones. Into under $2. Gold skidding $51 this morning, 23.64. That's down 2.13% right now. Silver down 4.81%, down to 27.9. And then copper is actually up a little, 0.21, but it has been on the skids. So this could be a slight reversal, maybe this is a little bit of a rotation out of the precious metals into copper. I don't know, but I'm just making that up. Okay, never mind. Then we've got the dollar continuing to fall against the yen. But strong against the euro this morning. And we've got the Bitcoin dropping another 1,600 down back into the 64,229 range, heading back into the 60s, into the 50s. We'll see. It may continue to drop, but it's certainly dropping rapidly right now over the last couple of days. Okay, that is what's happening with the markets. What a wild day. What a wild couple of weeks. Everywhere across the board, whether it's the politics, whether it's the economy, whether it's the numbers, whether it's Tesla. Boy, have we had a lot going on. Let's go back again to Tesla, up 3.29% or $7.10. I think that's a tiny bit off of where it was. Okay, watch please Cern Basher this morning. I know he'll have lots of really additional exciting economic news like this, as well as Tesla news. He's really emphasizing Tesla now, so make sure you watch Cern Basher later today. And then we got Ferguson on, Bradford Ferguson on tonight. So that's why you want to hit that notify button. And in order to do notify, you need to hit subscribe. And then finally, if you wouldn't terribly mind, if it wouldn't be a big imposition for me to ask you to do Patreon, that would be extremely helpful. It's been great talking.